And welcome to the Midday Market Update for March 9th, 2021. My name is Kevin Hill. I'm here to take you around the freight world with the one of the luminaries of the freight industry, Michael Vincent. How are you doing today, Michael?
Nice job, Kevin. Very nice job. You
Hey.
nailed it, brother. I'm doing awesome today, and that just made my day. What a smile. You see my smile? I'm about to pull a muscle. I'm so happy that you pulled that off, my friend. It is, hey, twice weekly, live, interactive, FreightWaves, LinkedIn, Facebook. Get your questions and comments in because you know who's on the show is Mitch Luciano, who is he? CEO of TrailerBridge. And you know TB Nation is going to show up in force today, so they always do. But, yeah, get your questions and
Yeah,
comments in during the show. We'll get them answered and address them as best we possibly can. Right, Kevin?
we will. And we have Alan Adler, our own Detroit bureau chief, coming on to talk about Workhorse and USPS and other things that he's covering with trucking OEMs. But it's always good to get that word of the day out in the first 10 seconds of the show. I can sit back and relax. I don't have to worry about saying habeas corpus or anything else over the next hour. So we're good to go, aren't we?
Yeah, we're fine. Now we can concentrate on the show. It's absolutely beautiful. We got Andrew Cox in the house again today. Do we have him back?
Let's get Andrew Cox in here, hopefully, to do the first headline of today about Canada's ELD mandate.
Yeah, we're going to talk right through, Nick. Hopefully, we get this thing sorted out. But yeah, Canada has taken a slower route to implementing an ELD mandate to its commercial vehicles. In doing so, the Canadian government has added some teeth to the mandate. ELDs must undergo certification by a third party accredited by the government. But no ELD has been certified yet. So when the Canadian ELD mandate takes effect on June 12th, it won't have any initial enforcement. The Canadian ELD mandate was unveiled in 2019 and was designed to have a lot in common with the US mandate, given that the majority of Canadian trucking companies run cross border. And as a result, the majority of trucking companies in Canada already have US ELDs. The Canadian regulations requirement of a third party certification is the single most important difference, though. This is a contrast to the US, where manufacturers self certify. And as a result, far fewer ELDs are expected to be approved in Canada. For context, there's about 600 that are approved in the US. Canadian officials emphasized that the mandate and certification process would not lead to a separate ELD needed for Canada. Existing ELDs, including those already in use for cross-border operations, can continue to be used once their software is updated and they've been successfully certified. But whether any given device used today will get approval in the Canadian mandate is still to be determined. Fellas.
Yeah, that's interesting. So you don't have to have two, but the ones that we're utilizing right now that are already crossing the border. But I guess they're crossing the border right now, but there's no mandate, right? So they're not requiring them to use
Mhm.
those those ELDs in Canada, I suppose, right? That's pretty much what's going on. So now once it goes, you have to go get that third party certification, I guess. If you're an American, if you're already approved in America, it doesn't have to be an American company. Anybody really can have an ELD as long as it's approved, right?
Precisely. In the note, Alan Adler spoke to Keep Trucking. Keep Trucking believes that they will get certification in Canada. There's a company called IP Solutions that is working to begin certification according to Transport Canada, but we haven't heard any word on the specifics on that or a timeline.
So yeah,
Yeah, I'm wondering how. Go ahead, Kevin. Sorry.
oh yeah, it's Nate Tavok that did the story for us.
Right.
Is the early morning story, feature story of the day here at FreightWaves. So it kind of follows in a little bit, besides self certification, but the timeline follows into what the US did. I remember back in 2017, leading up to that, I was doing a lot of surveys about small carrier adoption of ELDs, and everyone procrastinated to the last moment. It was like December 18th, I think, 2017 was that first initial phase in, but they didn't really enforce it until the final mandate. April 18th, 2018, and that's when tickets started happening and things they started really taking it seriously. So I can see why the Canadians are going to do the same thing, because there is a learning curve once you go from paper logs or even switch different vendors of ELD providers. There's a learning curve to get up and set and ready to go.
Hmm. Yeah, no, it's a solid point. How much of this is that they're learning that the actual self certification Are we starting to see? And I know that there was issues with with the keep trucking ELD. I believe they were talking about the wrong device or something like that. It was kind of off balance. But are they learning that these things can be manipulated? And that I mean, that's what the Canadian what the report basically says is they want this third party verified so that it can't be manipulated. So they're suggesting that ours are easily manipulated, or those that are approved in the U.S. Is that right?
Yeah, there was even a quote there from somebody from the Canadian officials that said, that some of the paper or some of the ELDs have been so easily changed that they may have been better off going back to paper logs. So I do believe that they're in that mode now where they're just trying to find the ones that are, I guess, least easiest manipulated to ensure that those can be used in Canada. I think it's just going to be time will tell. I think that they're going to roll out some of these near that June 12th mark, but we'll just have to wait and see. I'm sure Nate Tabak will be reporting on this throughout the time.
Yep.
Yeah, he definitely will. So let's move on to Mack trucks. They reintroduced a class 6 or 7 truck that they pulled off the shelves in 2002, and it's getting rave reviews.
That's right. Mack has re-entered the medium-duty game, and its customers are very happy about it. Mack stopped selling the Renault-based Freedom medium-duty truck back in 2002, as you said, but the newest customers of its new line, the Mack MD series, are responding with glowing remarks. John Schwind, the general manager and director of medium-duty trucks for Nextran Truck Center in Florida, said that this launch of the MD series was the most impressive product launch ever by Mack. Mack recently spent $13 million to convert a former comic book publisher in Virginia to build the Mack series or to build the MD series. The series includes the MD6 and MD7, which are Class 6 and Class 7 trucks, respectively. Both trucks can be used for dry-van or refrigerated hauling. They can also be upfitted to tank trucks, dump, stake, or flatbed applications. The positive reactions began when Mack started showing the dealers the production-ready trucks. That optimism reinforced Mack's decision to add to its on- and off-highway Class 8 models. The MD mimics the look of the heavy-duty Anthem model and shares the comfort and ergonomic design features. Fellas.
Yeah, Mack trucks. I mean, they're always a hit with drivers and everyone. That's the reason why they are such a premium brand.
No, they definitely are. But do we know why they took it off the production line in 2002 to begin with, and what the change was? Just entering that market, trying to tap into that. What is it, 100,000 or something like that? Is the market they predict something like that? It's 60 or 80 to 100,000 units a year is the market they think they can grab with these. Is it solely a play for that?
90 or 100,000 trucks, Class 6 and 7 trucks made each year. They didn't say why in the article. Alan did not write why that they had left that market, but it's certainly a market that they can get back into, and that's why they're coming out with these MD trucks. They haven't given any estimates. They don't do any forward estimates on how many they're going to sell, what their orders look like, or what their backlog looks like. But Alan did speak to 2 dealers or 2 companies that had ordered upwards of 150 trucks each. So it does seem to have some positive reaction and some orders coming in.
Yep.
So it's a question I wrote down because Alan's joining us in here in a few minutes, and we can ask him that definitely.
He'll have the history. If anybody's got the history, he's got it.
He does have the history. He's been around a little while in this industry. So let's go out to the West Coast and see what's happening with congestion out on the West Coast, Andrew.
Yeah, Kevin. Greg Mueller wrote a great piece comparing the 2015 port congestion fueled by labor unrest to the current pileup. And the 2015 congestion was a landmark event for U.S. importers. There was massive congestion among contentious contract agreements between dock workers unions that led to some importers shifting their business to the East and Gulf Coasts and Gulf Coasts, and diversifying their supply chains. But despite the lasting impact that happened in 2015, what happened then is paling in comparison to what's unfolding at the Port of LA and Port of Long Beach in 2020 and 2021. The difference between the number of ships at anchor is enormous and growing by the day. You can see the chart there. The congestion in 2015 was largely in the first quarter, peaking in mid-March with a high of 28 container ships at anchor, and anchorages were cleared just 6 weeks later. This year, the number of ships at anchor has consistently hovered around 30, reaching a high of 40 on February 1st. And it's not just the numbers that are higher this time around, it's also about the duration. The current congestion crisis is already longer than the 2015 incident with no end in sight. And the number of ships don't tell the whole story. If congestion was calculated in terms of TEUs at anchor, not ships, there would already be a wider disparity between the 2015 incident and the 2021 incident. The same number of ships are carrying far more TEUs this time versus then.
Yeah, they're much bigger. Talking to when we last spoke with Gene Soroka out there in Port of LA, he was saying if the ship stopped showing up, they'd still have a month of work sitting out there on the water, which is unbelievable to think of there's a month worth of work sitting there, right? And then when it hits the port, it's like what 5 or 6 days before it actually clears out of the port once those containers are taken off of those ships. But Andrew, I'm wondering, is there is there a light at the end of the tunnel, and is it a train, or is it actually we're going to clear this up anytime in the near future?
There are some green shoots. There's some things happening that are giving people some positive, some optimism about the coming months. For the first time in months, Flexport reported last week that space and equipment is opening up at base rate levels on sailings from China to the West Coast. The Container Availability Index produced by the Container Exchange showed a marked improvement in container equipment availability in China and in Shanghai. Meanwhile, ocean spot rates have stopped climbing and in some cases have actually pulled back. There are reports that carriers are not hitting shippers with as many premium charges above the base rate as they were just a couple weeks ago. But these positive developments don't necessarily equate to falling cargo demand nor lower port congestion. The House will soon vote on the next stimulus package, and it's likely to pass. So we're looking at $1,400 checks into American pockets as early as next week. And in the past, the stimulus funding has increased inbound container volumes to LA and Long Beach. So we're likely to see another bump there. So as you said, even if no ships came, there's still a month worth of work. But the thing is that the ships aren't stopping; they're continuing to come. So this may be a little bit of a reprieve to get some work done and get some of that cleared. But there's really no end in sight, and it's still very congested on the West Coast.
So, hey, Andrew, if I might ask you a question on that subject of the 1400, and it's kind of off topic. Well, it's not really off topic. It's the consumer demand and what they're buying and the big bump that we saw earlier during the pandemic over the summer, where we saw people buying all these things. If you recall last week, when Craig Fuller, our CEO, had the discussion with it was James Pomeroy from HSBC Bank, I think it was, Andrew. Do you recall that one where he was talking about a lot of that bump was kind of like one-off purchases, and even going through this, that buying habit would change. When I saw that, I wanted to call you and ask you what your thoughts were on that, and it affects this and the amount of volume that we would see pressure on those ships and also on air cargo, obviously. What's your thought on this round of stimulus? Do you think it's going to have that same bump, or did people spend that money on those one-time bumps and they may keep this knowing that, that kind of travel and service economy is going to open up?
I actually don't think we'll see the same immediate one-time bump. We'll see the same one-time bump, but at least be spread across many different segments, more so than the previous one. So the $1,200 stimulus, Bank of America did some amazing research on what segments benefited the most from that. And overwhelmingly, it was electronics, home improvement, furniture, the same things that we spent our money on throughout the COVID-19 pandemic. That's what the first stimulus checks went to. A lot of that was going to home computers and things to set up offices to work from home. So I do believe a lot of that electronics demand has been pulled forward. So I don't think we see a big bump to electronics from this next stimulus, but you still have an entire year where people didn't buy many clothes. So you can see apparel get a pretty nice bump from this next round of stimulus. But I do agree with you in that I think Americans are looking towards the next couple of months. They're looking towards being able to fly again, take vacations, and they may put some of this away in expectations of that.
Well, let's switch gears a little bit, and it kind of goes along with this changing in spending. Are we about to see, going back to the point of sale, your newsletter, are we about to see ghost grocery stores? Is this what Instacart's all about, or is it something else?
It's something else. I've been looking to write about Instacart for a while, and my newsletter was a day late because this story just turned into more than what I thought it was at the beginning. So it's coming out today at 1:00. But I wanted to write about Instacart because they've had a crazy year. They've raised 3 rounds of funding, the latest $265 million at a valuation of $39 billion. That's 4 times where it was just 12 months ago. And every inch of their business has exploded. By some accounts, the now 8-year-old company has 50% of the online grocery market, the fastest growing segment. So with an IPO on the way, I wanted to take a look back and really see how Instacart has gone from niche to necessity and question whether they can maintain this dominant position post-COVID in this highly sought after, highly competitive market. And so I did a little background on it. I won't go into too much detail about the history of Instacart. I'll start with the pandemic. And the pandemic supercharged Instacart's growth from every angle. In a 4-week period, they saw their 4-year goals met. Overnight, sales jumped 500%, basket sizes jumped 35%, and they became a bloodline for people that wanted to avoid stores and stay away from COVID. And it's really hard to understate how unprepared their 600 software engineers and their, at the time, 180,000 contract shoppers were to handle this millions of influx of new customers. But they did take a lot of market share. By some estimates, they were taking half of all new online grocery market participants during the big months in April, May, and June. So there's been wide-ranging estimates of their market share right now, ranging from 28% to 50%. But in every estimate I've seen, they are the market leader when it comes to online grocery shopping. And Rick Watson, founder and CEO of RMW Commerce Consulting in New York City. Shameless plug. He was my guest for Point of Sale episode 5, which is airing on Thursday at 2:00. So tune into that. But he believes it's already too late for incumbents like Walmart and Amazon, and that Instacart is quickly headed to become the largest grocer in America. He points to their scale and their market share head start in online grocery, again, the fastest growing segment, and the marketplace model's ability to scale and offer wider selection at very small additional cost. So there's no argument whether online grocery is here to stay. The only argument now is whether delivery will become the status quo for online grocery fulfillment, and I'm skeptical.
And why is that?
Well, I'm skeptical because I think it costs too much. I think Americans, what will eventually win out is the best combination between cost and convenience. And I think that's BOPUS, or curbside pickup. Instacart exploded this year, not because Americans all of a sudden were willing to pay for the convenience, but because they were willing to pay to avoid the store. And I'm certain a portion of those people have fallen in love with online grocery and won't go back in the store if they don't have to. But I do think it's a minority, and I think price is the deciding factor in this war. So time will tell whether the average American sees grocery delivery as a reasonable splurge. But I just don't think they'll see that as such. So the weekly Walmart run, the weekly Kroger run was already in the routine. BOPUS allows you to cut the time on that routine by 90% at no additional cost. So I don't think Instacart becomes the next largest grocer in America, but they've already become synonymous with grocery delivery, and that's a really valuable position. The only question is whether it's a profitable position, and time will tell.
Time will.
I'm kind of with you on your skepticism a little bit there, Andrew. I think people. Yeah, I think not only do I like saying BOPUS, I think it's a really cool term that came out of this, but I believe that is the way to go. I mean, that's kind of where my family stuck. We never went to the actual delivery, and I saw a lot of people do that. And yeah, I agree with you. Even with the boxes, the refrigerated boxes at your door front and stuff like that, I think BOPUS wins out.
Yeah, I mean, for people like Craig Fuller, our CEO, or Seth Holm, who live up on the mountains, 20 minutes from a grocery grocery store, that may make sense. But for me, who lives 5 minutes from Walmart, BOPUS just makes so much more sense. And I think for the majority of Americans, which 95% of Americans live within 10 miles of a Walmart, I think BOPUS just makes sense. It cuts down the time at no additional cost.
Yep.
If they can just start picking the right food and quit substituting out everything I don't want substituted out, everything would be rosy and great. But until that happens, who knows? But thank you very much for the headlines and the point of sale recap. Always fascinating discussion with another luminary here, Andrew Cox.
Yeah. Okay, thanks, guys. Wow. Hey, everybody, if you want to sign up for Point of Sale, you go to freightwaves.com/POS. Comes out usually Mondays and Thursdays. This one just happens to come out on Tuesdays. Thanks, fellas.
Thank you, Andrew. Always good catching up with Andrew Cox. We have Nico Brown in here. We have Rhonda. And they're having a nice conversation. So if you're watching here, join in on the conversation here on LinkedIn. Also Eric Masadi, TrailerBridge is being represented.
TB Nation is showing up, but they always do. I told you they're going to start showing up. They're going to start coming in, man.
They did.
They're luminaries, as you would say.
They are luminaries. Nico
Brown is a luminary as well, by the way.
He is. And another person who's a luminary is our own Nick Austin, who's going to give us a weather update for today.
Yeah, apparently he doesn't like radar. He doesn't like using radar.
What an introduction. I appreciate that, guys. Yeah, I got a lot to live up to now, but anyway, talking about a lot of snowfall coming to parts of the western U.S. Yeah, there's going to be another round of heavy snow in the Sierra Nevada later today through tomorrow. So watch out on Interstate 80 particularly, but that's nothing new even for this time of the year, even though it's sort of late in the season for most folks to be getting snow, not necessarily in the Sierra Nevada. But a much broader, widespread snowstorm will be coming later in the week to parts of the Rockies and the Plains. So let's talk about that. That'll probably have a much more impact, I would say, a higher impact on supply chains and on truckers out there. So let's go to Sonar Critical Events. And I'm talking about this region right here from Colorado and Wyoming over to South Dakota and parts of Kansas and also into Nebraska. So we're talking about I-25, Interstate 70 and 80 as well. Beginning Friday and lasting through Saturday, that's when we'll see the bulk of the snowfall. There'll be a lot of heavy snow in those areas, especially in the Rockies of Colorado and around the Denver metro area, one of the busiest freight markets. And we'll see some snow showers lingering into Sunday and probably even into early next week. So this could certainly be a prolonged multi-day event here before the storm exits the region. Denver is definitely the largest market and largest metropolitan area that's in the target zone. And we're talking about potentially snow totals from Friday through the early part of next week of 1 to 2 feet in a lot of areas, especially in a lot of the mountain areas in the Rockies in that impact zone. So Denver is the biggest area there, but there are some other smaller cities and some other smaller airports and lots of interstates and U.S. roads where there could be potential roadblocks for truckers out there. Not only heavy snow at times, especially Friday and Saturday, but also gusty winds. So there's going to be periods of whiteout conditions. That's just terrible for drivers out there. So this is maybe the time to kind of plan ahead, get ahead of the game. Still maybe a couple days to do that here before the storm really starts to kick in. Out in the Sierra Nevada, we could see a couple of feet of snow too, but this snowstorm here in the Plains and the Rockies will cover a much broader area. It's probably going to impact many more local and regional supply chains and a lot more drivers across that region. So later in the show, I'm going to talk about where drivers are going to hit periods of heavy rainfall, maybe some severe thunderstorms too coming up later this week across several states, and heavy rain in some areas as well. And talk about a new article that's up on FreightWaves.com talking about the states that have the most structurally deficient bridges out there. Drivers are probably using them every day. They're not necessarily all unsafe, but they definitely need some work, that's for sure. And we'll talk about that a little bit more coming up later in the show. Back to you.
Thank you very much, Nick. Always good to hear the weather forecast. And since we're 11 days away from spring, it's good. It's good. Everything's except for the mountains, the weather. The rest of the country is looking pretty good, isn't it?
So far, so good. I mean, no areas of widespread severe weather, tornado outbreaks, or large areas of flooding anywhere yet. We've had some river flooding in some areas, but so far it's been pretty quiet. But March, April, May, that's the primary severe thunderstorm season for the plains and also for the southern states. So for a lot of areas. So we'll be watching for that. It's possible that it could be a pretty active severe season as far as tornadoes and hail, things like that. So we'll have to keep a close eye on that. But of course, heavy blinding rain, flooding, especially if it's really large aerial flooding that lasts for weeks or months across any particular region, that always has a really big impact on supply chains and on trucking. So hopefully that won't happen, but we'll keep an eye on it. And of course, we'll be posting every day as far as weather updates, what's happening in the coming weeks and as we go through the spring.
Great. Perfect. Thank you very much, Nick.
You bet.
So, Michael Vincent,
definitely tuning into Nick to find out what's going on with the severe weather, because yeah, he's right. We're coming into those seasons where it can get a little bit scary sometimes. Well, you're from there. You're from Tornado Alley, are you not?
I am from Tornado Alley, and this time of year you start getting a little nervous because activity is going to bound up, and it's going to go through at least May. You get those nice warm hot streaks, and then you get the cold air and the warm air battling it out over Oklahoma and Texas, and all of a sudden you see some massive storms pop up. So it's dangerous. It's real too. I mean, it's you don't want to be driving through any of those. And then you have the wind too, which is just you know 40 miles an hour on a normal day.
So we're starting up a string. We got our third luminary coming up, and Zach Strickland with the freight market update. Yeah. Shall we hear from Zach?
We should, yes.
Hey guys, so the market's pretty much holding steady right now. Tender rejection rates coming down a little bit week over week, slowly. The van tender rejection index seems to have hit its peak in late February, around 27.5%. Right now it's sitting right under 26%, so not a lot of movement there in the last couple of weeks. Reefer rejections hit a peak last week of about 50.8%. And they have come down slightly to 50.3%, almost unnoticeable to anybody that's in the space, of course. There does appear to be a little bit of moderation throughout the country. Some of the markets, though, are changing rather dramatically. We do have some, some of the larger markets, for instance, all seem to be kind of cooling off a little bit. Carriers are definitely a little bit more willing to go into those bigger places right now. Obviously, the demand there is strong enough to make that happen. Some of the smaller markets, though, are starting to get a little bit, unattended at the moment. Some of the biggest volatile moves upward in terms of tender rejection rate week over week, we've got Milwaukee, Knoxville, Cleveland, and Charlotte, all showing pretty significant increases there. Some of the biggest downward movements have been out of the West Coast, so Ontario. Detroit came back down after being really hot last week. Minneapolis, another one of those that's moving down, as well as Columbus. So Ontario, kind of been the focal point of the freight market over the last year or so. Volumes are starting to come down a little bit. Does this mean that the overall market is starting to cool off? I don't think so. I think we're just seeing some port congestion issues really not being able to translate that maritime freight onto the surface freight. Talking to Mike Bowden-Distel earlier today about the rail volumes coming down as well out of Los Angeles. And then we also have, people are trying to get around this a little bit. They're making a few extra moves. We got a lot of ships anchored, as you well know. Greg Miller's article pointed that out pretty clearly today. So it's one of those things. I think we're kind of sitting in a holding pattern right now, but there's still a ton of freight to move. It's just unable to translate necessarily to the surface transportation en masse. And once it does, though, there could be a big potential for another breakout move in the market. But that being said, there's still kind of this bottleneck holding everything kind of clamped tight out on the West Coast.
Another big move, Michael Vincent.
Yeah, it's an interesting situation where you see these kind of these peaks and valleys, even though you see the pipeline is quite full. I mean, you see the pictures. There's still 40 plus ships sitting out there that are going to hit the port. And some of that stuff has already been diverted to other ports as well. So it's coming in other locations. Demand isn't slowing down. We've seen that through the economic numbers, which, speaking of that, we'll hear from Anthony next, I guess, right?
Yeah, well, let's hear these economic numbers from Anthony.
For my update today, I'm going to touch on manufacturing. I know last time I was on, I harped on my skepticism around the unemployment situation, initial jobs claims, and things like that. But there have been significant releases on the manufacturing front, and that's going to be tied to, of course, the manufactured goods new orders report that was put out, that was updated for the month of January. Bit of a lag, but still telling nonetheless. So for that report, we saw that there was an overall increase of 2.6%. Within that, we saw that durable goods for the month of January are now up 9 consecutive months with an increase of $8.4 billion or 3.4%. Within that, we have transportation equipment, which is up 8 of the last 9 months. And we see that there was an increase of 7.7%, so a substantial rise for overall transportation equipment throughout that month. And we see that new orders for non-durable goods are now up 1.9%. But one of the reports I really want to touch on is going to be the ISM, the Institute for Supply Management, PMI, the Purchasing Managers Index. The way you read this is anything above 50 is going to be indicative of expansion within manufacturing, while anything below 50 is indicative of contraction within the industry. Within the main PMI, we saw that there was a reading of 60.8, and that's going to be an upward movement, and so that there's showing continuous expansion within the manufacturing segment. Within that, there are subcomponents that I always like to look at. The new orders component showing a reading of 64.8. Now it's going to show that there's going to be more production down the line as activity ramps up. Production is now up at 63.2%, 63.2 percentage points. But the main thing that I want to draw your attention to is going to be the prices segment. Prices are now up to 86 points. This is up almost 4 points from the last month's reading and a substantial rise. So this is going to be an area of concern potentially if they hold, and they have been holding. So definitely keep an eye on those prices, especially as commodities continue to be on a shortage.
Yeah, that's really good advice there, Anthony. Right? That manufacturing number is hot and heavy, right? 60.8 was that the exact number on that? I think it was somewhere around that.
Yeah, no,
he threw out a lot of numbers, so I can't keep up with them sometimes. But I do know that manufacturing is hot based on that, and that pricing is hot too. So he's talking a little inflation there, a little inflationary pressures on because of raw materials and demand that we're seeing all around us.
Yeah, I mean that's something we need to look out for. But we've been, there's been an attempt to try and encourage a little bit of inflation for a number of years now.
There has, since the financial crisis, really 12, 13 years. There's, all the Fed policies are geared to encouraging inflation, and that's the reason why we've been at ZIRP, zero interest. What is that?
Yeah,
ZIRP. Zero interest bound, right?
For, is that what it is? Is that the new term, ZIRP? Is that what it is?
Yeah, ZIRP. Yeah, it's ZIRP. It's zero interest, zero interest rate percentage, maybe. So ZIRP. That's what they call it, ZIRP. So that's a new word for you, Michael.
Gotcha.
Yeah.
No, I mean it's interesting. Everything was up, and we and I didn't hear him say that he was not buying into it this time. That he was skeptical. Did you? I mean, he seemed like he was pretty positive on what's going on.
Yeah,
we'll see. Although he's always got that cautionary number. He's like, watch out for that pricing index up 4. It's holding. That's a dangerous sign. Inflation's coming, but a little bit of inflation is I think needed a little bit. So, my opinion. But
maybe so. So Krista Matthews here, Vice President of Sales and Marketing at IXF. She says, "Good day, everyone." She's in here. So Julio Madera. And Josh Hempstead, who likes to pick out his own fruit and vegetables instead of doing Instacart or curbside delivery. Same, you never know what you're going to get if you order, curbside. If you go out and you pick your fruits and vegetables and your fresh food, then you have total control over it, right, Michael Vincent?
Yeah, you do. It sounds like you've got an issue with people touching your food.
I do
at the grocery store. Okay, great. Who doesn't though? You know who's a luminary and absolutely loves to have his food delivered to him every single day?
Mitch Luciano.
Mitch Luciano, President and CEO of TrailerBridge. We should bring him on right now and talk to him. Hey, Mitch, there he is. How'd I know you were going to be there?
Thanks for joining us.
No, it's good to be here. I didn't know that'd be my lead-in would be, the having my food touched every day, but I am an Instacart fan. I do like Instacart.
Well, at least Michael Vincent didn't call you an exotic pet, like Thursday's episode when Lawrence he introduced him as an exotic pet because we were talking about exotic animals.
I would have to ask what pet I would be then.
That's a good question. I mean, what if you're going to be an exotic pet? What pet would it be?
I would have to ask the people sitting out here in my office. I don't know if never thought of that.
TB Nation is in the house, so just put the comments down and on LinkedIn. Yeah. Let us know what exotic pet you think Mitch would be in the comments. But Mitch, hey, tell people about yourself a little bit about TrailerBridge. The nation always follows you guys around. Let's get down to business here, man. Always insightful. You are a luminary of sorts in the business, and that's why we have you on to find out what's going down. So tell us a little bit about TrailerBridge, and let's get into this.
So TrailerBridge, we're actually going to be celebrating our 30-year anniversary here on April 1st, and it's not an April Fool's Day. It's actually happening. We started as an ocean carrier servicing Puerto Rico, and since that time, we've established ourselves as a ocean carrier servicing Puerto Rico, the Virgin Islands, Dominican Republic, and we have a rapid growth in our logistics group for domestic brokerage and our MVOCC. And so we've had a great run over the last several years. We have an amazing 230 employees now as part of the family. We're all across the country, and it's been exciting. This past year has been tough, I think, on a lot of people, but we were very fortunate to have a great great group of people to fight through all this.
Yeah, absolutely, absolutely. And so we're, I don't know if you were watching it earlier, waiting in the green room there, but we're talking about this incredible record-breaking backups over in San Pedro Bay out on the west coast, and we've talked to other people like from Golf Winds International. Kevin Hill and I have, and there's talk of people moving, they're moving their freight up the West Coast or bringing it through the Panama and out to the East Coast into the Gulf, et cetera. Are you seeing freight start to pick up and container ships start to pick up over there in Jacksonville and in your neighborhood where you guys are operating?
So, Jacksport has had a very successful last several months for us, and specifically in the Puerto Rico trade and the Caribbean. We've been full. It's people they have money to spend, and so they're spending it on consumer goods. So we've been very fortunate, and it's been tight. It's been tough. It's our truck drivers. They're running nonstop. We're squeezing out containers from wherever we can get them to fill our needs, and so we've seen an uptick, and we've seen the uptick across the board on the East Coast. It's not just here in Jacksonville. We've seen it up and down the East Coast.
Yeah, we have Becky and Samantha and Katie, Catherine. Who else do we have? We have a few other Amber, Krista. All the trailer TV Nation is out in full force on LinkedIn, but they haven't given us their recommendations on what is Pat UP. So we talked about. It might be. We're always, as Michael said, we're always talking about the Asia Pacific, and you're talking about the East Coast right there. What about Latin America, the Caribbean, other parts of the world? I mean, I guess is it just full bore shipping? Tight capacity on the ocean market throughout the world right now.
I think it is. I mean, obviously, it's. I would venture to say that every port is having challenges, and there's tight capacity everywhere. When we've seen rates out of Asia to Puerto Rico, for example, quadruple over 8 to 12 month span. We've been the carriers in the Jones Act have been stable. We haven't raised rates even though we're full, but there hasn't been a need. We don't need to do that. We need to stay a steady path, and that's what we decided to do. So every area is tight. I think the biggest key is finding the capacity, and working with your clients to make sure that they have advanced bookings and they know, don't ask for a load to get picked up tomorrow because it's going to be challenging to get it shipped. And I think people are starting to realize that. But we know this is not going to last forever. We hope that we're full forever, but we also know that the economies are going to play a role here over time. People are going to get to travel. People are going to be spending money on traveling to Puerto Rico instead of buying that new stove or new television. So it's going to be different going forward.
Yeah, and Mitch, I'm wondering. There's a lot of different dynamics in that market that you guys play in the islands, right? All through the islands, windwards, leewards, the whole situation. And I played in that market as well, and it's amazing to me how the businesses that run there, and certainly the lifelines like TrailerBridge, how serious they take their importance to those communities down there, right? And they've been through some tough times. There's a little bit different dynamics. It's not like a stimulus package comes up and therefore everybody in the island starts buying stuff, right? They're not getting those stimulus packages. But there has been some release, I would think, of hurricane funds now, and some willingness to start release that a little bit and do some infrastructure and some preparedness, given the fact that COVID cases in the United States are starting to come down and the vaccines are going out there. The old saying is, the U.S. gets sneezes and the Virgin Islands get the flu, right? Well, when we become healthy, they start to become healthy, and Europe as well is a strong influence down there. Are you starting to see some of that dynamic start to pick up, and that therefore the freight coming into those islands?
You are. I just don't think it's to the levels that we're seeing published out there. So, when under the Trump administration, he was going to release $11 billion. And I don't know, now under the Biden administration, it's $8 billion. But by the time it actually gets down to the economy, it's 20 cents on the dollar of what actually gets down to the economy. But they are spending. I mean, there's Puerto Rico is doing an amazing job of renegotiating their debt currently, and also on the power grid. There's a huge emphasis on the power grid. and getting that basically up to today's standards or even close to today's standards. So that's been a lot of the focus right now. We're coming into hurricane season, so we have to start preparing ourselves and all the islands down there for another crazy. We expect another crazy hurricane season. I mean, 2020 and 2021 they've been completely different in all levels of transportation. So we're expecting this to be a little bit unique again this year.
Let's take a look at hurricane season. Can you explain to our audience and to us, to me especially, what kind of chaos does hurricane season do for maritime shipping in a normal year? But what would the shocks be to the system if we had a really active hurricane system this year when capacity is so tight?
The biggest challenge is transport from port to port, right? So even though the hurricane may not impact the island you're servicing or the areas, you still have to hold at port if there's a threat or go way west or east, wherever you are. That delays the delivery of goods, that delays the return of empty containers, and therefore it goes down the line and keeps delaying. So that's the biggest challenge, I think. Obviously, when one of the islands gets hit, or even here on the coast of Florida, if that gets hit, then you have a whole nother challenge and issue. When Puerto Rico got hit in 2017, it was devastating to the people of Puerto Rico, and so you couldn't get around the island. You couldn't deliver goods. FEMA was challenged just to get water there, but you couldn't drive the roads, and so from the shipping standpoint, it's the waterways. It's making sure you can actually get there safely because you've got the crew to take care of, and that's the safety is the number one important thing.
Down effect too, to a certain degree, do you not? I mean, not all those islands down there. They're certainly not all deep water ports, and so you've got to have feeder vessels from the deep water ports to the shallow water ports, right out of San Juan, out of Charlotte Mile, I think is a deep water port as well in St. Thomas, right?
Agreed. So there's obviously a lot of those islands, as you're familiar with, Michael, in your past, that you have to have landing gear boats. I mean, you can't just show up, and those are limited by the capacity they have on them. They're not filled with 60, 70 containers typically. They're a handful of containers, and so you've got to keep delivering those to the people that need them in those shallow areas.
Yeah, that Tropic Rainbow 1 TEU was the capacity. 1.
Exactly.
It went from St. Thomas to Virgin Gorda. 1 TEU.
1 TEU. That's not much, is it?
No, it's 120 footer, my friend. That's it on a weekly move. But so you've got a lot of things going on in the domestic market as well. The CLD or the ELD mandate in Canada is a third party situation right there. Do you think, just asking your opinion on the inland domestic move, you've got truckers, you got drivers, would we have done better to go third party right off the bat? And do you think we'll reverse that eventually? Do you think this is something leading down to, hey, we need something better? Because you're starting to see rhetoric of, we would have been better with just paper logs in some instances, right? Do you think this is going to grow?
I don't know. I mean, I'll be honest with you. The problem is there's so many trucking companies. And how's one third party? And the cost for those trucking companies, in my opinion, to fall on the guidelines, and they've been operating in a certain way to date. And maybe you're right. Maybe from the beginning they should have done this. But to implement a third party at this point could be incredibly costly. And then it's, how's a third party always correct? I'm always questioning when a third party manages something under the government's guidance. I don't know. It's working right now. So why? I believe it's working. Why change it? Yeah, you're going to have some bad apples out there. They're going to cheat the system a little bit, but overall, why change it? Everyone's following the rules, in my opinion, and why put another layer in there? Anytime you start adding layers, typically things not so good happen.
Yeah,
I can't. Go ahead.
Third party, first party, self. You're always going to have problems because in society, if it can be hacked, it will be hacked, right? Whether it's paper hacking or tech hacking. So we definitely agree with you. I wish we had about 10 more minutes to talk to you, Mitch, but we need to wrap it up here. How does our audience reach out and learn more about TrailerBridge and yourself?
Just go to TrailerBridge.com and you find all the information about TrailerBridge on there. And if you ever need to reach out to me, you just call call TrailerBridge and ask for me, and they'll put you right through. So I'm always available, and I look forward to talking to whoever wants to call.
Great. Always
Guys,
having always a pleasure.
Take care.
You too.
Oh, hey, Eric Masadi came up with the bearded dragon.
The bearded dragon.
Yeah,
Good,
Vice President of
good.
Logistics at TrailerBridge. I think that's his call for Mitch's exotic animal. His exotic.
Yeah, the bearded dragon. That's that is a bearded dragon. That's curious, definitely. There's probably a backstory to that. But you know who else has a lot of backstories about everything in the freight market is our next guest here, Alan Adler, our Detroit bureau chief here at FreightWaves. Thanks for joining us today, Alan.
Thank you, Kevin. Michael, good to see you. I can't read your poster behind you, though. Who is that?
My poster?
Who, me?
Yeah, you, Michael. Who's in that poster behind you? Never mind. That's okay. I'm sure we're short on time.
It's Bob Marley. It's a Marley poster.
Bob Marley. Perfect. Okay. Yeah. Island guy. Good.
Yeah.
So what do you want to talk about, Kevin? Let me guess.
Well, let's start off with workhorse, right? Let's do workhorse, and then we can convert to your favorite topic of du jour, right? So, workhorse is an evolving story, right?
Right now, I like workhorse. I told Dooner the other day, we were on the Freightcast on the Insiders show, and I said, workhorse and Nikola, we don't have to talk about them today, but workhorse should be a 10-episode show either on Netflix or Paramount or something like that, because we have got more turns and more drama, quite honestly, in that story than I ever would have expected. I mean, I've been writing about workhorse for a while, but now maybe they're going to get some help from the government, maybe. No guarantees that they get this new $6 million or $1 billion, assuming it gets approved by Congress, but they seem to spend money, so that doesn't seem to be a problem. But yesterday you had 17 Democratic legislators put in a bill that said we want electric powered mail trucks, which is what Workhorse wanted to do, and they lost out to Oshkosh, right, a week ago, and defense contractor who's not really planning and not really much into electric vehicles. So maybe a little bit of pressure there. Workhorse hired lawyers. They might go the route that, that Amazon went against Microsoft and, they sued the Defense Department. Who says maybe Workhorse doesn't do something to get the attention of the Postal Service? So it's a fascinating story.
What kind of case would that be, though? I built my business to capture this contract and I lost it, so pay me. I don't understand it.
Right. I don't know if they've got any legal recourse, to be honest with you. I think maybe they just need to be patient. But really, I think, I'd love to be the fly on the wall that says, here's why the Postal Service did not award at least some of the agreement to Workhorse. Louis DeJoy, the Postmaster General, has been, saying, look, we're trying to run the business well. It costs us more to get electric mail trucks, certainly on acquisition, maybe not in operating them, but so I we'll see what happens there. But it sure has been an interesting story, and a lot of people are interested in it.
Yeah, it almost appears to me, Alan, and I don't know if you have an opinion on this part or not, but it seems like there's a little bit of political posturing in Workhorses, China being this ping pong ball being tossed across the net back and forth, going, what the hell is going on? Because Biden wants everything electrified. They have 670,000, so 645,000, whatever it is. Oshkosh doesn't make electric vehicles. They get $478 million or whatever to do this, whatever the award was, and only 10% are electric. And now all of a sudden, there's appropriations or a bill being put forth to give $6 billion to create that electrified force. Well, where'd the $478 million come from? Was this like an award that was going through and just kind of came in timely politically and went, okay, I'm going to spend this $400 with Oshkosh and get my $6 billion that I need for USPS and make them commit to. I don't know. Is there anything there with some political posturing happening?
The original deal, Michael, was $6 billion. That's what the Postal Service has to buy new vehicles. Not to get confused with the state bill. But
Okay.
they gave some of the money to the guys at Oshkosh and said, here, get started, tool up a plant and start building vehicles, and then we'll give you more money. We have more money. This is just the first tranche. But the confusion comes in because yesterday the bill that was introduced calls for $6 billion, which could easily be confused with the original $6 billion. Now, LaJoy told Congress a few weeks ago, he said, look, you want electric vehicles, give me some more money. And so apparently they listened to him, and maybe that's what will happen. Oshkosh works with Ford. Ford has an electrified transit van, which certainly would be good. So I think even though, Workhorse's stock, which had been beaten down badly for a couple of the last week or so, bounced yesterday on this news, but there's no guarantee for them. They're not guaranteed a thing. This might just go to someone else. We'll see. That's such a tortured process. That deal started in 2015 or 2014, and it finally became a contract on a Tuesday afternoon a week ago. So
that does sound like a tortured process, definitely. Let's talk about other electrified, alternative fuels, electric vehicles, kind of that market. I know a lot of them are going public through SPACs. Any new updates on that? I know it's a hot market right now.
Yeah, well, obviously, I think what's happening now, and you've seen it because whether it's been led by Tesla going down 20% in the month or whatever, but a lot of these electric vehicle SPACs and infrastructure SPACs have been beaten up pretty bad from a share price perspective. Some of them are back down close to $10, which is kind of their original price. And so I think there's a few out there. We were talking this morning, Kevin. I think there's a few that are good plays that have probably become long holds for people. Hang on to the stock. There's others that, quite honestly, are probably not going to make it. And a story tomorrow morning that's going to post. That's going to talk about maybe this love affair is changing partners. That is, we're going to leave the electric vehicles behind. We've kind of drained that pool of good candidates. There's probably one or two more out there. But now we're going to start looking at autonomous trucks, right? So you've got a company called Plus that's in play for a SPAC. You've got Enride, which is a Swedish company. But the first one that'll go will be too simple. They're doing an IPO and should be later this month. We should see that go public.
Yeah. We were talking this morning about how much money has been raised for SPACs and the kind of open market, and I have some numbers from a Bloomberg article that I got after that conversation, and it looks like over the last 15 months, there's been 474 SPACs created, raising $156 billion. So certainly more than the past 10 years.
Right. Yeah, I mean, everybody's got a SPAC. I was talking to a SPAC starter this morning, who told me about some other former colleagues at a rather large automotive company that I once worked at that have started a SPAC as well. So starting them is really not that difficult. Sustaining them is. And so, like with any part of business or anything else, you've got good actors and you've got bad actors. The good actors are the ones who not only do the diligence, but probably have some knowledge about the business they're investing in. And so when you see a lot of these guys, and I'm familiar with many of them in the automotive space, going for mobility companies, that makes some sense. But it was pointed out to me, for example, when we talk about mobility, these vertical takeoff and landing jets and things like that, there's already two SPACs and potentially a third one coming in that space. We're not going to see, George Jetson's collapsible airplane anytime soon. But you're probably talking mid-decade before these things really get out there. And, we're going to invest in them now. Well, I'm not, but you might. Just saying, there's money going into everything that might fly, right? Literally.
There is. And I think that's always a good conversation with Dooner about investments in anything that'll fly, or DFBs, or not DFBs, but non-fungible NT was whatever
NFTs.
The non-fungible NFTs.
NFTs.
NFTs. I had to look it up, man. I had to look it up because he wanted to ask me about baseball cards as an asset class, and I can help him there. But when he gets into that stuff, it's like, I got to tuck my kids. Now my kids don't even know what that is.
Yeah. Well, you can buy one-time cat memes for $800K. I mean, who would not jump into that market?
Yeah, I'm not going there. I've always believed, and I think this is really important. don't invest what you don't understand, right?
Yeah.
So I don't understand it. Not investing.
Yeah, no. Well, thank you very much for your time today, Alan. Always a pleasure talking to you. Join us very, very soon, I'm sure. How does our audience reach out and read your stories, subscribe to Truck Talk, your weekly newsletter?
I knew you were going to give me a plug. Thank you. Truck Talk is now available. I want to talk about that one. Truck Talk is now available at FreightWaves.com //subscribe. And you can select Truck Talk. That comes out on Fridays. We're almost into our third month here and having some fun doing it. Seems to be getting some attention. It's been out there on a subscription basis. So you can subscribe there and get it in your mailbox on Fridays. If you want to read what I do, FreightWaves.com, and you can search under my name, Alan Adler, or A Adler at FreightWaves.com. I guess you can even find me on Twitter. I think I do Twitter. So at Alan Adler.
Thank you again, Alan.
Beautiful.
Thank you.
Thank you, guys.
You bet. So, Michael, Vincent, what do we have coming up tomorrow on FreightWaves TV?
Hey, tomorrow is our virtual event, right? is Evolve, right? The Digital Wildcatters present Evolve, a one-of-a-kind virtual event for oil and gas professionals. Be among the first to hear about cutting-edge technologies, innovative startups, disruptive strategies, etc. It's going to be pretty informative. It's a hot topic right now. Kevin, like number 3 cause of companies going out of business, or trucking companies going out of business, is diesel costs, and there's a lot to it. Dooner and I will be there'll be a shortened version, but a 20-minute What the Truck tomorrow. Dooner and I talking to the CEO and founder Ryan Hunt of he's the CEO and founder of Rig Callout, which is a visibility platform designed specifically for those oil field markets. With crews moving around and pipe having to get there and sand, et cetera, in there. It's a crucial for just in time, but also being able to see when those projects are completed so that you can line up all these deliveries to just hit exactly right, and can cause, millions can be made or lost in hours.
It really can. We also have with Sonar, with Kyle and Luke, episode with that, and John Kingston talking about how Sonar helps energy supply chains and best uses and practices for forecasting your freight spend and your logistics spend. If you are anywhere near the oil patch, oilfield services, the entire gamut. So you can go in, register right now at live.freightwaves.com. and go up and our upcoming event, which is tomorrow, and register right there to view that. It starts at 10 a.m. Tomorrow, East Coast time.
Yeah, and we've got other. So, and then March 24th, we've got another virtual event. You've got the 3PL Summit. March 24th coming up, the 2021 3PL Summit, which is going to be great. Latest technologies and practices guide to success this year in 3PLs and the intermediaries, which is going to be great. Also free to attend. And then the one that's not free to attend is the big granddaddy of them all this year, the Coachella of Freight, F3, the Future of Freight Festival in Chattanooga, which is November 8th, 9th, and 10th in Chattanooga. 30 locations, EVs, drones, the whole deal, music, a huge festival. Experience the new technology in the freight logistics of the future. $595 is what they tell me for a ticket right now, Kevin.
That sounds like a heck of a deal, and I think we're all ready to go out and go somewhere. Go somewhere, see people in person, be able to mingle around, social distancing, of course, if needed. And really be able to talk to people one-on-one again. So we're all looking forward to F3 coming up in November. And for this episode of Midday Market Update, that is about a wrap right here. So take care, and we will see you again on Thursday.
Peace, everybody. Have a great day.